afternoon, good evening, everybody. Thank you all for joining to the EPC webinar on OCT Inst. I'm thrilled to be joined by such a great panel today. I'm Damien, Head of the Industry Engagement at BNP Paribas, as well as the OLO Strategy Advisory Group Chairman. Before getting into the content, let me just start with some practical information. You can ask a question through the Q&A box that you have on the screen, if I'm correct, on the right for the people on the website, and on the bottom for the one using the mobile version. Also, please note that the webinar will be recorded and will be made shortly available on the EPC website. Before starting and getting into the OCT Inst content, I would like our panelists to shortly present themselves. Annick, can you please start?
Yeah, sure. Thank you very much, Damien. So my name is Annick Moes. I'm with the Euro Banking Association. I'm head of industry issues and cooperation initiatives there. My first touch point with OLO dates back to 2009, when I was the rapporteur of a group dealing with that topic. So I'm happy to see the topic back on the agenda with a vengeance.
Hi, Alberto, over to you.
Good afternoon. My name is Alberto López. I am Deputy Managing Director at Iberpay. I lead the areas of technology projects and innovation at Iberpay, and I am also leading the One Leg Out initiative in the company. I am very pleased to be here today to tell you about the implementation of the OCT Inst scheme in the Spanish community.
Hi, Dave. Can you introduce yourself also? Thank you.
Hey, good morning, good afternoon, good evening. Dave Fortney with the Clearinghouse here in the United States. I'm in the strategy group here at TCH, and among other things, I looked after our efforts over the past 24 months in IXB and One Leg Out.
Thank you. And our last panelist, Carlo.
Good morning, good afternoon to everybody. Carlo Palmers. I'm working at SWIFT as business solution architect in the product organization looking after market infrastructures globally. So it's the ACHs, RTGSs, and instant payment systems on SWIFT, and in that sense also the interoperability and the connection with and between them. So looking forward to a One Leg Out intensive discussion.
Thank you all for the short introduction. Before getting the insight from our panelists, we did believe it was good to give you some context and content on the OCT Inst scheme. So let's start with the first slide. What is an OCT Inst transaction? So an OCT Inst transaction is a transaction in any possible currency, including non-euro SEPA currency, but with at least one leg of the OLO transaction denominated in euro. It can be an outgoing or an incoming account-to-account credit transfer. It can be processed 24/7, 365 days a year for the euro leg. The transaction has to happen between a PSP established in or licensed to operate in the SEPA geographical scope and operating in the euro leg. Also, we will have a counterparty that can be a financial institution which operate outside the SEPA geographical scope. And it's important to make the distinction between this actor and the second one that we will just mention. Why? Because in these cases, the currency of the fund transfer in the non-euro leg can be in each possible currency, including the euro. But when we have the second option, when we have a FI established or licensed in the SEPA geographical scope, then the currency of the fund transfer in the non-euro leg cannot be in euro, but needs to be in another currency. So moving to the next slide. The main feature of the OCT Inst scheme. So it's an optional scheme for the PSP in the SEPA geographical scope. Like I mentioned, it operates 24/7, 365 days per years. It's based, the OCT Inst scheme is legally and technically limited to the Euroleg only. Of course, the EPC cannot define concrete obligation for the non-Euro leg FI, but we can see, and that's what will be discussed further on, in case of interlinking between two market infrastructure, of course, a legal framework end-to-end will then need to be established. And of the leg outside of the Euro leg can be processed instantly or following classical cross-border route. We also set up a maximum amount for the OCT Inst scheme, which is 100,000 euro for the outgoing and incoming transaction. So that's already quite a significant amount to start with. We have seen in other community that at the beginning, often the amounts are way lower, but then can quickly increase as soon as the process is well understood by the end-to-end chain. Compared to the classical SCT Inst, there are differences on the charges. Indeed, there are three options. So the debt, credit, and share option, like we have on the classical cross-border payment, can be used with a preference, of course, for the share option. Share has to be respected in case of a PSD transaction, and also what is really important is the full info about the charges applied to the transaction needs to be included into the transaction message. And the charge has to be debited separately from the credited or debited amount. So that's to really have the full transparency. So moving to next slide, please. Of course, when you have transaction, you need to be capable of doing recall and return. It's fully possible on the OCT Inst scheme. I will not go to all the detail of the recall and return because first, perhaps we will need to go further on into the basic flow before going to the return, but keep in mind that it's fully possible. What also is important to understand is here, as we have a cross-border leg, we will need to be able to transport additional data, typically linked to the CBPR Plus and HP Plus guidelines. So what are few of these key elements? The currency and the type of the account of the payer and payee that could differ to the classical SCT Inst, the proxy alias of these accounts, other identification for the institution, typically on SCT Inst or on SEPA, we use a BIC and an IBAN, but BIC and IBAN are not adopted worldwide. So we need to cope with other identification of bank and account. The UETR. So the UETR is a key element on the cross-border side. It allows banks and client to track end-to-end their payments. So it's often called the GPI tracking that was launched by SWIFT already a few years ago, and that is really well adopted on the international payment side, and more details about payer, payee, reference, and so on. And the last element is what we mentioned, the charge option and the charges applied to the transaction are also part of the scheme. And last point, this is really based on the ISO 20022, and that's really what we try to push end-to-end. And with the cross-border, so the so-called CBPR Plus moving to ISO 20022 by November 25. In fact, we are currently in a coexistence period, but by the end of November 25, all the community will have moved to ISO 20022. It will facilitate the end-to-end process of all the information in the payments. And the last element on this ISO 20022 feature is the fact that the OCT in scheme will adopt additional characters that are currently used in CBPR+. So now that you know the key elements, what is the current uptake of the OCT in scheme? So we have around 90 adherents from the Spanish community and few from Andorra. Typically, the reason why we have Iberpay into our panel, because they have really working on the adoption for the Spanish community. We also have two currently CSM that have adopted the scheme, so EBA clearing and of course Iberpay. But what is also important to understand is that the EPC has some license agreement with non-Euroleg jurisdiction within the SEPA. And the goal of that is that the other communities are also using the OCT in scheme rulebook documentation. And that's really key if you think about interoperability of such a scheme, and also to ease the adoption of the bank. If we all speak the same language, ISO, and we use the same rulebook, it will really facilitate the adoption of OCT in scheme around the world. And currently it's non-Euro-leg jurisdiction within the SEPA, but nothing stops to do it outside of the SEPA zone. So let's move to some flows to make it more concrete to the audience. So first, focus on the incoming OCT in transaction. So what you see is an incoming transaction means that the first leg is the non-euro leg. So a payer is initiating a payment through their non-euro leg payer FI that will pass it on to what we call the euro leg entry PSP. So what it means, it will be the actors that will be connected to the OCT ins, and that will be able to reach the payee PSP. So on the euro leg, there is a 20 seconds time to end-to-end to response to the transaction, with of course a target of 10 seconds, but the scheme allow a 20 seconds response. So without going into the details, but it's follow same approach as the instant scheme. But what does it mean in terms of transfers, and what can the payer mention do? So moving to the next slide, please. So here we start with a euro end-to-end example. So of course, like we mentioned, in such case, then the payer is a non-SEPA country. So he's initiated a 100 euro payment that he will pass it on to his payer FI, and the payer FI will reach the euro leg entry PSP. So he will receive the 100 euro. He will be able to pass the 100 euro through the OCT in scheme. It's coming from a non-euro leg payers. So, and the payee PSP is reachable to the OCT. So end-to-end, the payment will be in euro, and you will have a full transparency that it was a cross-border transaction. So that's really an important part of the OCT in scheme. Is it allow the full transparency on all the actors that have been involved in the transaction. But let it make more concrete with a cross-currency example. In the cross-currency example, the client is sending 100 euros that he want to process, and is requesting to send to pay the counter value in euro or not. Here in the we say it's optional. You could say send $100 and when sending out to the euro leg entry PSP, they do the conversion, or they clearly mention that they want it to be processed as euro. So there is no logic to be done on the Euroleg entry PSP. He know that he needs to convert it. So he received the 100 USD, let's say. He converted into euro and is sending it to the OCT Inst scheme to reach the payee. And the payee will receive the converted euro, so the X euro amount, but will also get the detail of the instructed amount and the exchange rates that has been applied to the transaction. So it's full transparent that the transaction was converted by the Euroleg entry PSP. I hope it's clear, and don't hesitate to enter your question to the Q&A, and we will try to respond to them at the end of the session. So let's now move to the outgoing OCT Inst transaction. Here, there is a first step that it's important to understand, is in case the transaction needs to be processed in another currency, so that there is an FX in place, there needs to be an FX rate exchange between the payer PSP and the Euroleg exit PSP. So the Euroleg exit PSP need to share the information, an FX rate to the payer PSP in order for him to know the amount in euro that needs to be transferred in order to pay the requested amount by the payer. This is outside of the OCT in scheme, but it's important to understand that there is sharing information between the two Euroleg actors in order to have the FX rate in place. So moving to the flows, similar to the incoming, so the 20-second apply, but with one important information: the OK received by the Euroleg exit PSP, it's an OK that the transaction can be moved forward. So it means that the Euroleg PSP is able to send out the transaction to the non-Euroleg payee or to an intermediary agent in order to reach a non-Euroleg payee. But that's not a confirmation of credit of the payee. We are, of course, pushing, and that's also what the G20 objective will help to reduce as much as possible the time on the cross-border side, but it's outside of the OCT Inst rule book. So that's what we mentioned earlier. The rule book is really between the Euroleg PSP. So let's go to the detail of a flow. So moving to the next slide. So on the cross-currency example, so the PSP can instruct 100 euro and request the equivalent amount to be paid in USD or GBP or any other currency, or it can also mention the instructed amount in a given currency. And that's, of course, in such case, also mention the conversion from that currency into euro in order to make sure that the transaction can be executed and that we know the rate. So there, the Euroleg exit PSP will receive the information, will apply the conversion, and will be able to send out the transaction to the non-Euroleg payee. So that's, in a nutshell, the flows. We don't want to go here too much in detail on the interlinking and how it could work, but need to imagine that in such case of interlinking, then it's the end-to-end change that will need to be validated end-to-end, and then you go to a near instant transaction. So I hope it clarify and give you the good background to move to our panelists. So now that you know how OCT Inst works, we believe it would be interesting to understand what are the European bank thinking on OCT Inst. And for that, I would like to let Annick sharing with us the outcome of the survey that the EBA Association has conducted, and how important is the OCT for our European community. Annick, the floor is yours.
Yes, thank you very much, Damien. It's a great pleasure for me to share with you some insights from the work that we've done with the Euro Banking Association on cross-border payments. It's a journey that we started about 2-3 years ago, and of course I will, as part of today's journey, also zoom in on OCT Inst specifically and share a few fresh insights of you on that topic in particular. So we have, as I said, been progressing this work with a dedicated expert group, and the aim of it is to support the overall industry in the general efforts that are underway to enhance cross-border payments, especially by unlocking instant payment systems for international transactions. And if we look at what we've been up to in particular, well, we did start off with a stock-taking exercise that involved our member banks. And if we look at the next picture, I always like to compare the cross-border payment situation really to a rather full and probably also badly lit fridge. This one is a lot lighter than we felt at the beginning of our journey. So there are a lot of promising ingredients that you see, picking out from the different corners, but no one seemed to really know how you could turn all of this into a tasty meal. And that's why we decided to dig in and poll our member banks on 6 processing solutions and 7 contributing factors. And we only focused on initiatives that have a European footprint, at the same time also a realistic outlook to meet a G20 timeline. So anything that has a timeline rather going beyond 2030 was out of scope. And we also only looked at initiatives that would also depend on some sort of a coordination effort to actually create reach and adoption. And we wanted with this exercise to incite our members to actually table the topic of cross-border payments, to work at it with their in-house experts and really figure out together which of these initiatives would be best placed to take cross-border payments to the next level for the customers and also to meet the G20 target objectives. And if we turn to the next slide, you will see how these 6 solutions fared. So what the slide shows is that all of them have some potential value in their own right. So, at first glance, you don't see, that huge of a difference. But if you dig in a little bit closer, you see that the expected impact is clearly stronger for transparency and speed than it is for cost and access. That was one conclusion, but also that it was especially and is especially strong for the 2 OCT Inst infrastructure solutions that we had on our list. And you see they are boxed in here. So it's on the one hand, the Iberpay solution and EBA Clearing's RT1 system. And if you look, for example, at the expectations just for significant or clear improvements, because obviously there would be a need for significant enhancements in the market, we see that both solutions are among the front runners on transparency in particular, and RT1 OCT Inst, for instance, is also in a pole position for speed, and they're not faring too badly on the other target target set by the G20 either. In case you wonder why there are 2 bars for Iberpay, the reason is fairly simple. For the longer bar, we excluded those banks that had indicated that the Iberpay solution wasn't relevant for them, for instance, because they don't have any close ties to the Spanish market or Spanish banks in particular. With those excluded, you can see that the solution really also gained a lot in the impact that it would bring in terms of enhancements. If we turn now to the next slide, you can see that in analogy to the OCT Inst solutions, the EPC OCT Inst scheme also fared very, very well in our survey. So you can see here in terms of contributors, we looked at that scheme plus the IP Plus adoption of ISO 20022 and 5 of the Swift of the key Swift solutions. As you may be aware, some of the Swift solutions in particular are built specifically to remedy one or the other aspect or one or the other pain point in cross-border payments. And so obviously those scored then very, very highly on these particular points, like for instance, Swift GPI on transparency. But what you can gather from this slide in general, though, is that OCT Inst was also the clear overall darling among the contributors. So much for the content of the survey then on the contributors and the solutions. If we turn to the next slide, I think that the question when you have been looking at your stock taking and your inspection of the fridge has come out successfully, you have to conclude obviously that you have probably everything in place to prepare a meal, but you still have an empty stomach. So the question is, what is holding us up? We wanted to really understand where to go next, because the survey clearly led us to conclude as a group that there is a good outcome. There's a specifically good outcome for OCT Inst in light of the fact that we do have a working scheme. We do have 2 solutions already out there in the market, that are ready for usage or already have been tried and tested to some extent. And there are also contributing propositions like, for instance, Swift GPI that you could bring in to further enhance or enrich the proposition that you could create based on these ingredients. But so what's missing us what's missing for us from moving to the next phase? And that's detailed on the next slide, because we obviously did poll the banks as well on what they are facing in terms of challenges. And we did look at general challenges, and there you obviously got the usual suspects, the regulatory harmonization, the standards harmonization. But we also gave them a lot of opportunity to feed in qualitative input. And here, what you could read between the lines and where we also really were able to deduct very good clusters was that the major issue is really reach, which is of course not a surprise given that we were looking at initiatives that would require a cooperative push or coordination in the market. But there is also really a concern about the implementation cost, efforts, complexity, both in the face of there being a plethora of solutions out there, but also on the other hand, the huge amount of different priorities and the workload that the banks have been running with in payments on the implementation side. And so basically, what we had to conclude as a group was, well, okay, we have the ingredients, we have also the recognition that something needs to be done, but no one seems to really see the light at the end of the tunnel. And the problem with the light at the end of the tunnel is that sometimes if it's not there, maybe you actually need to light the candle yourself and be the light. And that's then basically what we're trying to do next. And if we move on to the next slide, you will see that we are going out in the week to come with a call to action that I wanted to sneak peek with you here already. And we would like to actually, with the willing coalition of our members that are engaged in the group, to call on the PSPs out there in the European market to further improve cross-border customer propositions and meet the related G20 targets by making themselves reachable via the OCT Inst scheme, and that they should really begin the resource planning now, with some of the workload of around the implementation of the instant payments regulation on the one hand, slowly fading out, hopefully in the months to come, but also certainly having built the foundation for really starting strong now on an implementation agenda in 2026, in light also of the G20 deadline in 2027. And you can see here on this slide a quote from our chair from the group, Simon McConnell from Citi, who basically says the next step is in our hands. And if we turn to the next slide, there are a few testimonials more. Where basically you have Jan Paul van Pul from ING saying it's really time to discuss an agreed adherence date. Rauf Susi from BBVA saying, well, the Eurozone is at the forefront thanks to the implementation of ICT in RT1 and in Iberpay. So, let's get moving. And Francis Cedre of Société Générale, who stresses that we do now have in our hands a powerful tool for solving the last mile issue, the very expensive last mile, and that also takes most of the time in the transaction processing towards the beneficiary leg. And with that said, in the words of our members of the group, and I obviously hope that we leave these slides with you so you can dig into the slides, into the testimonials in more detail, because there's more to discover. I'd like to basically just turn to the last slide. Promise you that there's more to discover about this survey if you're not familiar with it already, because it has been very, very well received and widely read in the market since it came out last fall. And we will come out with a follow-up note and a bit of a sneak peek also in light of a bigger white paper that we're doing at Cybos, and publishing then over the summer now at EBA Day. So with that being said, there are definitely quite a few PSPs out there that are game for OCT Inst, and happy to discover in this webinar even more reasons why they are right in the direction that they're taking on it. Yes.
Thanks a lot, Annick, for sharing all this insightful information. I would like to move to Alberto now. So it seems from Yannick, Alberto, that when she's voicing over the banking community in Europe, that they are really interested in the OCT in scheme, but at the same time, I believe there is a lot of question on what does it mean to implement OCT? How do you reach the adoption? So the Spanish community, along with Iberpay, is once again leading the implementation of a new functionality in Europe. But can you share with us what was the journey? Why did you decide to move forward as a community, as Iberpay? How complex it is to implement? And also, of course, what everybody wants to know, what are the lessons learned, the do and don't do that you could share with the community? Over to you, Alberto.
Sure. Thank you, Damien. I'm going to talk to you about the implementation of the OCT scheme in the Spanish community. Move on to the next slide, please. Okay. Iberpay and the major Spanish banks started to analyze the possibility of processing one leg out transactions in 2019. We created a working group, and in July 2023, we were able to complete a pilot in production where we processed international payments, reducing the instant payment rates, and we were able to complete payments that we received from Australia, New Zealand, Brazil, and UK in just seconds. Besides, we completed the first worldwide connection of a payment system to the SWIFT tracker in order to update the status of a payment to improve the end-to-end transparency. Then, in November 2023, the EPC published the OCT Inst scheme, and after that, Santander and Iberpay became the first PSP and payment system to join the scheme. And we also processed the first one leg out payments in Europe. In November 2024, all the Spanish banks had been onboarded onto the scheme. And today we have 90 PSPs, 16 of them direct participants, which represents 93% of the Spanish market, payments market. Besides, we have 2 banks that are certified as intermediaries. It hasn't been easy, but I think these figures clearly demonstrate that we are going in the right direction. As regards the next steps, we will participate in the TIPS call for interest to test the cross-currency service between euros and kronas. We also plan to develop interoperability with TIPS and RT1's one leg out to have full reachability in the SEPA area. Next slide, please. Concerning the scope of the implementation, these are the main pillars. First of all, we consider one leg out as a new functionality of the instant payment service. One leg out is integrated into instant payments thanks to the superset solution that was designed by Iberpay. All the messaging and interfaces are reused thanks to the compatibility between the ISO versions of both schemes. Our solution is agnostic and neutral in terms of potential collaborations. One example is the integration with the SWIFT tracker to update the status of a payment on behalf of the PSPs. Move on to the next slide, please. I'd like now to talk about the development of end-to-end corridors. We have been defining sectorial agreements and use cases with our PSPs in order to guarantee the homogeneity and predictability in the processing of all payments in Iberpay. However, to be able to process international instant payments without friction, it is essential to focus on the reciprocity rules between different jurisdictions. As Damien mentioned, the EPC is reaching agreements with other jurisdictions, what I think that is a very good news. There are also different strategies to establish end-to-end corridors. Firstly, one-to-end strategy, collaborating with international partners such as SWIFT or Nexus. Secondly, the one-to-one strategy, creating direct connections between domestic instant payment systems. Thirdly, establishing interoperability with other one leg out solutions such as RT1 or TIPS, because they have their own international initiatives such as IXB or the corridor of TIPS with the Nordics. Lastly, we are supporting the strategy of our international banks such as Santander and BBVA. Move on to the next slide, please. Well, now let's move on to the numbers of the Spanish case. The results of the survey that we carried out told us that the percentage of effort required by PSPs to implement OCT Inst compared to the effort invested in the instant payments implementation is anywhere between 5 and 20% for the beneficiaries PSPs, around 5% for the originator PSP, and approximately 10% for the intermediaries. Regarding the time span needed for PSPs to implement the OCT Inst scheme in full, most answers stated that it took them between 6 and 12 months, and the impact of work on working hours range from 600 for medium banks to 5,000 working hours for the large banks. We assume that these differences are because large banks are certified both as beneficiaries and intermediaries. Next slide, please. Well, let me now share some key learnings from the project. With respect to the tools, the PSPs have valued positively the working group where we have been collaborating for the last years. Moreover, it is important to reach agreements with non-SEPA countries in order to test end-to-end transactions. The PSPs have also highlighted the importance of involving the business from the beginning so as to gain their support and build new use cases based on one leg out. Finally, the PSPs have also found the integration with the Swift tracker especially valuable. Regarding the don'ts, it is advisable to focus on the non-happy path use cases from the very beginning of the project, such as compliance or technical issues. And also the PSPs have identified some Swift originated payments that make the migration of all the scenarios to one leg out more challenging. Please, next slide. Yeah. Finally, let's consider the benefits of being an early adopter. First of all, early adoption increases the business opportunities thanks to the potential to establish agreements with PSPs outside Europe and being a gateway to access the Euro area. It also provides the opportunity to gain market share in outbound international payments. And well, we think that late entrants, by contrast, miss the opportunity to contribute to the initial design of these one leg out solutions. And upon joining, they must adapt to already mature processes. Well, thank you very much for your attention, and I hope the presentation has been of your interest. If you have any questions, I'll be pleased to answer them at the end of the session.
Thank you, Alberto. So now that we have a view on the European market from Iberpay, but also from Annick, who is voicing over the banking community, we would like to understand from a non-Euro countries, what are the view on instant cross-border payments? Dave, you already mentioned the IXB project, and of course, when from a European point of view, we look at corridors, the US dollar is always on the top of the list. So what can you share on the US market regarding instant cross-border payment?
Thank you, Damien. So I'll offer a perspective. I won't say it's the US perspective, but perhaps it's a perspective of a market participant in the US, and we share a lot of the vision that's been expressed by the prior speakers, and in fact, part of the original vision when we at the Clearinghouse initiated our instant payment solution, which we call RTP. Part of that initial vision was to enable not only domestic but cross-border flows, and including our early embrace of the ISO 20022 message standard, which has been integral to our RTP strategy. I'll step through kind of the current state of affairs as we look at them in the US with cross-border payments. And I do want to start with batch ACH. We have something we call IAT for international ACH transactions. It's the way that payments are made cross-border today in the US. It was introduced in 2009. It's all the things that an ACH network is. It's batch. It's next day settlement today. It is efficient in terms of the volumes that you're able to push through. It is mandatory in the ACH network, which virtually all financial institutions are part of in the US, and which we operate a substantial piece of that network at the clearinghouse. It is mandatory to receive these payments. And it was mandatory that institutions, put up the necessary sanctions and OFAC screening infrastructures and procedures in order to receive them, something that was not required for domestic ACH. It was quite a lift when it was put into place. And there are around 50 million plus transactions a year that are part of that. There is a proposal on the table that the industry is considering currently to do some speed up of these international transactions and move them to a same-day ACH status. It would require that institutions be able to do their screening multiple times a day throughout the day, as opposed to once. I will note that it has kind of a downside of requiring further investment and kind of a non-ISO solution. It doesn't solve some of the issues with ACH in terms of not being able to have an immediate confirmation. Nothing is real time, everything is batch. And the message format is proprietary and unstructured, essentially. So that's where we are today. Looking to the next column, as we start looking at one leg out, we've started calling it one leg in and one leg out because we get too many questions about, is it going out, isn't it going in, and which is both, and it's a confusing conversation. So just to preempt that, we call it one leg in, one leg out, very similar to the way that the OCT Inst was described. With Damien, we're looking at the US leg. We are looking at instant, using the attributes of the real-time instant system to provide instant confirmation, instant posting, instant settlement on the US side. It is inherently multi-corridor. Of course, that's dependent on our RTP participants that are willing to serve as kind of gateways to other corridors in order to sponsor the transactions into the network or out of the network, as the case may be. And just like in OCT, inherently it would be an asymmetric scheme. We can't really, as part of that, guarantee anything about an end-to-end customer experience. It may end up being batch or delayed, or other things could occur on the non-US leg. We have some technical work to do, which is really almost complete, in order to enable this, and also some other activities that we're looking to enable in our network, and it's part of our upcoming release. And we have a compliance period for that release that stretches into 2026. And so from a technology perspective, we feel like we would be in position to support this sometime in mid-2026. The final decision has not been made as to when we would open up the network for this traffic. It would have to be after that compliance period for sure, and also after the updates to the rules and the risk procedures to permit the activity. We are thinking that it would, very similar to Europe, it would initially be opt-in. We think that the value of this is only going to increase as the number of endpoints, and so we would be looking to a strategy to move from opt-in to opt-out, and hopefully to mandatory over time, at least on the receive side. We also see possibilities for scheme reciprocity to potentially even out or to deal with some of the asymmetric natures of the scheme. So with the select corridors, be able to come closer to being able to guarantee a uniform experience, both in and out, through some kind of an agreement that would look at things like posting times and whether things are real time end to end, and maybe some things about fees, and all the things that we were talking about would be potential considerations for scheme reciprocity as an upgrade. So there's that one. Moving finally to the right, we invested time and energy with our partner EBA Clearing on an initiative called Immediate Cross-Border Payments, or IXB. We think that one leg in and one leg out could be a potential stepping stone to IXB, or one leg in, one leg out could end up being the destination in and of itself. There are some advantages that the IXB offered. It did effectively guarantee end-to-end customer experience, with things like synchronized settlement and the transparency, and also effectively enforcing some rules adherence, because it was a technology solution as well as scheme rules. So the ability to be in the middle and to make sure that the messages were ISO end-to-end, and any translation that was needed was performed and preserved all the full message content, etc. We did put a pause on further development after our pilot, further development of the switch, and the primary reason for that was we got feedback from our respective participants that let's go prioritize one leg in and one leg out and other initiatives, but that one in particular, and then come back and look at should we move from one leg in, one leg out to potentially scheme reciprocity, to potentially an IXB-like solution down the road. So that's where we stand, and kind of the way that we look at the market, with a lot of energy right now focused on how to do a successful rollout of one leg out.
Thank you, Dave, for this view on the US market. So now that we have the European view, we have the view of a non-European country, the US. Carlo, can you give us a view on the global adoption, with SWIFT being covering the world? It would be good to understand how the market is currently evolving.
Okay, yes, thank you, Damien. I will take you a little bit through the rest of the world to share with you what we've seen and monitored with other countries as well. A good base for this discussion has been set by the other speakers already, and at the end of the few slides that I have, I'll turn back to OCT Inst and come back to Europe, and then we can add a couple of questions, I hope. Right. So the map that we're showing here, it's actually a map that is constantly changing. It's a really always in change. The dark green countries that we're showing here are countries where we know that there is an instant payment system available. The light green countries are countries where an instant payment system is in development. And you see that there are only few gray spots left. We had last month a roundtable discussion in Africa where the African banks said that they expect that by 2029, all the African countries will also have an instant payment system available in their country. And that's not going to be different probably in the rest of the world. Now, what we do see is that almost all, few exceptions, almost all of these instant payment systems have been developed for domestic traffic only, at least in first stage. So they are designed, they're built, and they're operational now for domestic instant payments. Also, focusing on very specific use cases for that reason, but that is changing. A few countries have done that from design, from the very beginning, but you will see that this is changing in many other countries as well. Looking at a few examples, if we maybe can quickly go back to the first one, a few examples where this is the case already: India, UK, Hong Kong, and Australia is open to accept cross-border transactions into their domestic instant payment system and then process them as international transactions domestically instantly. That is exactly the same as what we're talking about in this session, where the EPC has published their one leg out, the OCT Inst scheme. So that is what Europe is now opening up to as well, and what Dave mentioned that TCH is looking at as well. If we move to the next one, this is one solution. It's the one what we typically call indeed one leg out. The ones that have been added now on the slide, India, Singapore, Thailand, are what we call bilateral links. It's interlinking instant payment systems directly with each other. It's something that we've seen definitely in the Asian part of the world, where there is no bank in between, or at least that was the intention. And that has been set up between quite a number of countries in the Indian side in the Asian side of the world. TCA-GBA, the IXB project, initiated their pilot version also looking at the Euro USD corridor, but IXB had the clear intention to go multilateral afterwards as well. If we move to the next one, so those are the bilateral links. If we move to the next slide, we do see quite a number of initiatives where we're now looking at multilateral solutions as well. A few in Africa. TCIB was launched in Africa, covering the southern African countries with an instant payment system. But the BIS Innovation Hub has rolled out or is rolling out now in the ASEAN countries their Nexus solution. 5 countries are initially planning to adopt the Nexus solution in Asia. It's Thailand, Singapore, Malaysia, Philippines, and India. And those countries are setting up a multilateral end-to-end instant payment solution for their region. So that is yet another way of interlinking or of cross-border instant payment systems to achieve that. If we move to the next solution, we try to summarize this in a couple of models. The first model is our traditional correspondent banking model. You're very familiar with that. It is something that exists for decades already. It is cross-border transactions that are, when they arrive in a certain country, they are forwarded over the classical RTGS system to the creditor bank. Big disadvantage of this solution is that you do not you cannot rely on the RTGS over the weekend and overnight, because the RTGS typically operates in business hours. To address that, Model 2 are indeed the instant payment system. So instead of forwarding a cross-border transaction when it arrives into a certain jurisdiction over the RTGS, we could also forward that over the instant payment system, which is 24/7 available. So it does address the disadvantage of the RTGS. But as we said, instant payment systems very often are not open for cross-border transactions. So that is a change that in many countries is now happening. The instant payment systems opening up for cross-border, and therefore making instant payment systems, instant payments available on a 24/7 basis, also cross-border. The third model is what we mentioned, the bilateral instant payment system interlinking. So 2 instant payment systems hook up to each other directly. And at first, the intention of this solution was that you would take away the necessity of intermediary banks in such a solution. But in all the solutions that we've seen so far, it appears that those intermediary banks still play a role to provide the FX, to provide the liquidity in the target country currency. So there is always intermediary banks still involved, even though the instant payment systems do hook up directly with each other. Feedback that we're also getting from countries where such a system has been put in place is that It takes quite a while to agree on the rules and the scheme to put such a thing in place. And they all expect that this is going to be a solution that is very hard to scale. So it's good for bilateral corridors, countries that are closely to each other and that have a lot of interaction with each other. But it's going to be a difficult solution if you want to scale that to multiple countries and multiple jurisdictions, which is what Model 4 is doing. In Model 4, you start from the beginning with setting up a scheme that covers multiple jurisdictions, multiple currencies, and an interconnection between the instant payment systems directly with each other. But even there, you do not prevent the fact that you need intermediary institutions to provide for the FX. And if you click one more, I think we've got those arrows added as well. The intermediary institutions which do provide the FX and do provide the liquidity in the target currency, and therefore they do still need to have a correspondent banking relationship with each other to handle those transactions. That is something that we're monitoring, and when we're talking to people, to countries, to central banks, to instant payment operators, anywhere in the world, the expectation is that this is not going to be a race between these different 4 models. There is an expectation that all these 4 models will exist in the future and therefore will need to be able to work together. One jurisdiction might work with the one-leg-out transaction and the other jurisdiction might move into a multilateral scheme with a few of their neighboring countries. We will need to address over time how these models can work with each other. If we move to the last slides, whenever we're talking to our central banks or financial institutions or MI operators anywhere in the world, and irrespective of whether they run their market infrastructure on the SWIFT network or not, we still believe that these are 4 elements that are very, very important to stress in any of these conversations. First of all, pre-validation. Pre-validation for cross-border instant payments, we do believe is going to be key. You do need to make sure that even before you hit the send button for your transaction, the data that you're transporting is as complete and as correct as possible for the target country to be able to avoid rejections, to be able to avoid delays. The G20 targets there are extremely important as well. We do believe that these 4 elements are heavily supporting the objective of the community to achieve the G20 targets, definitely on speed and transparency. A second element that we are always stressing, and I'm going to switch first to the 4th bullet here, it's the harmonized market practices. The ISO 20022 migration in the RTGS world is definitely going on. In the cross-border world, we're reaching the end of the migration. CBPR Plus has intensively helped us there. HVPS Plus is the market practice description on how these messages should be used in an RTGS system. IP Plus describes on how to use ISO 20022 for instant payments when they're open for cross-border transactions. So IP Plus is picked up again and is going to be a very important market practice to follow, to monitor, and it's freely available for everybody that needs to have a look at that. Now, UVTR, Roberto mentioned it already a couple of times. We do believe that for cross-border transactions, the UVTR will become extremely important. It allows all the participants of a transaction to track and trace the transaction up to the end. And then tracking, of course, the GPI tracker is available to keep track of these transactions, irrespective of whether they're going over the SWIFT network or not. Today, we can easily track all transactions as long as they're on SWIFT. Now, when they leave SWIFT and the UVTR is transported beyond the SWIFT network, we're still able to track those. And the example that was given by Roberto was Iberpay, where the domestic instant payment system in Spain is not using the SWIFT network, it's using its own VPN. But Iberpay is updating the GPI tracker on behalf of the whole Spanish community. So anywhere in the world when a payment leaves for Spain and is being settled in Spain, the debtor will be able to track and trace the payment up to the end. The UETR is also transported over quite a number of RTGS systems that are not on SWIFT. To give you a couple of examples, SHIPS, FedWire, SIPS in China, Spain and Switzerland, quite important instant RTGS systems for global economy. The UETR is used there, and those transactions are therefore tracked and traced also when they leave the SWIFT network. And we do believe that that will be extremely important also when instant payment systems open up for cross-border transactions and are going to support these end-to-end transactions. Back to you, Damien.
Thank you, Carlo, for this overview, and clearly it's an interesting discussion because it's really the moment where cross-border payment reach domestic payments, and I have always seen it in my career as the cross-border was the last possible option when you were trying to process payments. No, it's the other way around. It's a cross-border payment can be processed through the domestic rail or to the instant rail. So it changed the way we are processing those payments. So thank you all for this great discussion. I think we are on time to have some Q&A. I'm trying to follow all the questions that are emerging on the Q&A box, and as well some of that I've noted during the presentation. So perhaps to start with, I would like to go to Alberto, because reading through the question, I see it's coming a couple of times, and try to summarize the different question. We see that banks are looking at why as a payer or payee PSP I should join the OCT in scheme. So could you share, Alberto, on how Iberpay and the Spanish community decided really to all go together? Because you see all your majority of the bank is adhere, so it's quite really impressive. But is there any why you managed to do that? How did you manage to do that?
Well, regarding the benefits of the OCT scheme for the banks, first of all, Carlo mentioned the RTGS systems close during the night, also during the weekends. They only work during business hours. So instant payments works 24 per 7 days, and a payment and the user experience is much better because nowadays when you want to make an international payment and you do it on Friday night, you have to wait until Monday in the morning to start this payment to travel. So the speed is something is a key point. Also the cost. The cost of processing a payment in a RTGS system is more than 100 times the cost of processing an instant payment. So it's also much cheaper for the banks to make these one leg out payments using the instant payment rails. And also taking into account the way the EPC defines the OCT scheme, it has a lot of synergies with the SCT scheme. So in Europe, in the SEPA area, the impact of adapting the instant payment rails and systems is not very high because the ISO versions, the interfaces, and also the rules of the way of processing the payments are almost the same. Also, what we believe is that the front runners can offer new services and use cases to their clients, and they can gain market share.
So if I can summarize, Alberto, is leveraging on what has been built for the OCT Inst. So really leveraging on all the works that the banks are doing on that, having a better client offer, being able to do 24/7 cross-border payments are the key elements. But at the same time, I think there are still a lot of questions on the challenges, and you explain a lot on what to do, what not to do. But perhaps going back to Annick, do you believe that this is addressing the challenges that the banks have expressed through the survey or through the EGXP working group?
What we have heard so far in our group, and that is still being discussed a lot, is that banks are looking for utmost cohesion and a setup that is as close as possible indeed to OCT Inst. So that means obviously also that they're looking to have as soon as possible a truly pan-European approach. With interoperability and also common and uniform practices, and that is probably why it is very, very important to them that there is a general move in that direction, so that we don't get any fragmentation that could be brought in by different initiatives cropping up in different corners. That's definitely something that not just multinational players but a lot of organizations are watching closely, also for the benefit of their customers.
Okay. Thank you, Annick. And just realizing that we speak a lot of the EGXP working group, but perhaps for the people, it's not fully clear what is the working group and what are you have in the pipe. So can you give some clarity to the audience?
Yeah, sure. It's a group roughly of around 15 senior bank experts from almost a dozen of EU countries, and they are basically also very much engaged in the general industry initiatives at CPMI level, at SWIFT level, and trying to bring their expertise together now in that group to see where we can bolster, where we can support a uniform and pan-European approach for the leveraging of instant payments, and in general, the infrastructure, the solutions, the market practices, the contributors that are already in the market. And so what we will do is indeed also for EBA Day come out with a sneak peek on the why, how, what around OCT Inst that should be taken into account on engaging towards that journey. And hopefully for Cybos there will then also be a more comprehensive white paper, but that will obviously depend on everyone's engagement. And indeed, Damien, you're a member of that group too, as I recall.
Yeah, indeed. Thanks. So thank you for this clarification. Perhaps a more challenging question, and that will be for you, Carlo. Sorry for that, but with all of payments and the concept of the OCT Inst deploy around the world will replace the international cross-border payments, and so in a nutshell will replace the CBPR plus aka SWIFT transaction. I know it's a challenging question, but what is your point of view?
No, I don't think it will replace that. If you look at the three models the four models that we shown, the cross-border lag between all these models does not change. So where you do see a change is from HPPS plus to IP plus, so from RTGS transactions to instant payment system transactions, when they're opening up for cross-border transactions. But the cross-border lag itself, we do not see that disappearing. So there is still that cross-border. Look at the example of how Iberpay has rolled out their pilot project. They are getting cross-border transactions in over the SWIFT network, CBPR plus compliant. And then once they arrive in Spain, they are transported over Iberpay to the beneficiary bank. That's why it's so important that this IP Plus working group is kicking off again. It's under the auspices of CPMI. And one of the goals there as well is to extend it if necessary, but to bring it closer to CBPR Plus to make sure that the transaction from the cross-border leg to the domestic leg is smooth and fast as well. All of that, by the way, doesn't prevent anything in terms of speed of the transaction. The GPI tracker has allowed us to start measuring the speed of the transactions cross-border for quite a while already. And if you see where, you know, that the target of G20 has been set, where transactions lag speed is at the very final leg of the action at the beneficiary's bank. So everything that is happening in the cross-border space and also in the domestic space is going very, very fast, and we're talking seconds. But where they do get delayed is at the beneficiary bank, the very last leg, up to the beneficiary account. So it's the posting, and for very good reasons sometimes. It's not that banks are lacking processing there. They are very, very often obliged by regulations, by rules, to do certain tests, to do certain checks, to do certain reporting, which delays the last leg of the transaction up to the beneficiary bank, the beneficiary account.
I fully agree, and as moderator should not answer the question, but it's really what as a banker we are seeing. It's the first step for us on all the cross-border instant scope is really looking at the last miles of the transaction. So typically more looking at the capabilities of the different country to have an incoming OCT Inst like transaction. That's what we also see being implemented in the different countries. Faster payment in the UK, it's not an instant, but near instant. The Australian market. So that's clearly what we see. And indeed, according to the statistic, and this is also where to reach the G20 objective, banks and the community are behind the objective. So continuing on the question, and Alberto, you could answer it, but I'm happy to also help you because it's more with the process flow. But in the current model of the Iberpay implementation, where is the FX down? So I think what the people would like to understand is, are the current model only euro transaction received by the entry PSP, or it's also cross currency and the entry PSP is doing the conversion?
Well, as you explained at the beginning, the OCT scheme is focused on the first or last mile, and in this case, we are only processing payments in euros. So the FX is doing by maybe the intermediary bank or at the origin in the other currency area. but we only process payments in euros between the initial and the intermediary bank, or between the intermediary bank and the final bank, in our case in Spain and Andorra, no? Where we have the PSPs connected. So it's also true what Carlo mentioned, that most payments are following the traditional international rails, but we are improving the euro leg in the international payment. But the FX remains as it was. We are not modifying this business model or anything else.
I think it's going back to one point you mentioned, Carlo, is that still the correspondent banks has a role to play in the end-to-end chain, and typically at the beginning with an OCT scheme that is an opt-in scheme, they will play a key role in the payment execution, because they will be the one that will be able to route correctly the payment and optimize the execution of those transactions.
And
we also,
if I may,
yes,
Damien, I think it's important to refer to the figures that Annick showed in the beginning as well, because that correspondent banking leg still has to cope with that perception of being slow, and you do see that GPI has changed the world. It showed in the survey of Annick as well. GPI has addressed that issue. It was the case maybe in the past, but it's no longer the case. These transactions are going faster.
Yes, and that and the GPI or the tracking point is really becoming a new norm for me, and that's why also I'm sure that's why Iberpay was mentioning the GPI tracker update, and I also heard that EBA clearing is looking at updating the tracker on these transactions. So it's very important, because that's also a key lesson learned from the banks, that we need to make sure that these tracking capabilities, the confirmation of credit we got with GPI, is maintained when we enable our other rails for the cross-border payments, because this is really, this confirmation of credit is the new norm from typically for the corporate.
For your info, and then I'll really stop. We're kicking off a market infrastructure working group with Iberpay, with EBA clearing, the forerunners in Europe for tracker update. But there are also many other from all the areas in the world, from Latin America, from Africa, from Middle East, from Asia and Europe, to do GPI tracker update, and it's a working group of market infrastructures that are using SWIFT and that are not using SWIFT.
Very good to know. Before concluding, I still want to ask one question, and I think it's more for you, Dave. OCT Inst, it's a new rails in Europe. And it was mentioned that it could decrease, potentially take some flows from the RTGS, because they have a larger opening hours, but still not the same amount at this time. So it will not replace completely the RTGS. And we don't have cross-border ACH capabilities on SEPA. Classical SEPA, you cannot process cross-border payments from the US. But if you were explaining that you already have this in the US, you have a IACH, if I'm correct, how you call it. Do you believe in the long term that these IACH could be replaced by an OCT Inst-like solution, or they will still coexist?
So I do think that there's a lot of reasons that they'll coexist, but there's also a lot of reasons that some of that volume could shift. That and it's a little bit the theme that was just talked about a second ago, which is the posting to the beneficiary bank, and then the uncertainty when the sender is sending a payment as to whether it's posted, when it's going to post, might it get rejected. And so what we're hearing is the biggest value for opening up to one leg in, one leg out is actually incoming payments. And it's not even the speed of settlement, which is a terrific byproduct that could be instant. It's the speed of the transaction confirmation going back. So whoever's introducing that payment would get confirmation back, that would include, that the beneficiary bank got it by, that under typical posting rules, the payment would be fairly immediately posted. And that's the benefit. So for that use cases that demand that's where we would see potentially some volume shift.
Okay, thank you, Dave, for the answer. So I would like to make sure to conclude and let you have a final word for the panelists. So just on my side, I would like to thank you all the panelists to join, all the audience for attending the webinar. I hope you have learned a lot on the HOLO, but I also would like to thank you, the EPC, for organizing and inviting us to this webinar. For me, there is a clear call for action. So if you are a non-European bank and you are interested, call your counterparty to push them to adopt. If you are a European bank and your CSM is not yet there, have the discussion, bring it to the community. Like it was mentioned from Annick, there is a call for action. We need to move forward. We need to plan it for 26. But with the 3 minutes remaining, 30 seconds for each of you to say a final word. Annick?
Yes, indeed. I would only say, go for it, see where you can leverage today's building blocks that are already in place, but also maybe the project teams that you have already running with a lot of the instant payments deliverables right now. And there's certainly more information and more support coming into the market also over the months to come. And it's really important to look into building a coalition of the willing that is broad and that goes for pan-European approach so that we can avoid fragmentation.
Thank you. Alberto, you want to go next?
Okay, well, I think improving the international payments in terms of speed, cost, transparency, accessibility, as the G20 set in the goals to 2027 is hard, but we have a good opportunity implementing OCT Inst, and especially in Europe, because we have the experience in implementing SCT, instant payments, and we can reuse these rails to process the OCT scheme, so one leg out transactions. So we can help, or we can improve a lot these international payments using these rails.
Thank you. Dave?
I just thank you for the time and the energy around this topic, and I look forward perhaps to a future webinar in some months' time or within the next year where we can all measure the progress and see greater adoption throughout the world.
Thank you. And Carlo, final word?
Yeah, opening up the instant payment systems to cross-border transactions is something that the different jurisdictions will have to do. We will continue, or we hope to continue, playing a role in the O of OCT, so the cross-border transactions, and provide value-added services like the tracker and so on. So great future in front of all of us.
So thank you all, and thanks again the EPC for organizing this webinar. I hope you enjoy it and you learn a lot. And we have not been able to respond to all the questions, but we will see with the EPC what we can do to give you an answer. And also don't hesitate to contact us if you want to discuss it further on. Thank you all. Have a great day. Bye.